But the story is not over yet. Gautam Shah is joining us, founder and chief strategist, Goldilocks Premium Research. Gautam, great to speak with you today. It's an interesting day for the markets. I don't know if I should use the word exciting, but interesting and memorable one way or the other. No one's going to forget what they've experienced today on the screen. From here on, we've cracked below 22,000 on the Nifty. Where is the support coming in? Where does the pain end in your view? And we'll, of course, wait to see what the picture in terms of the results ends up like. But technically, what are you seeing right now?
Well, good afternoon. As they say, don't count your chickens before they hatch. I think as market men, we all did that yesterday, and I think we are paying the price for it today. Honestly, I think political stability at the top was a very important pillar of this entire rally that started from March 2020. And because that pillar is shaking, the market is concerned, and rightfully so. I think we've had a fabulous run in the last couple of years. I think anything and everything was being justified on valuations. The market was indeed overheated. And given the numbers today on the political side, the market is concerned and it needed that consolidation. But, you know, I have seen 2004. I remember the time when the market was at lower freeze in 2004. But the key difference between that period and today, in 2004, we were driven by foreign money. In 2024, we are driven by domestic liquidity. And I think that's going to be the real test for the Indian investor, whether it can ride through these political developments. So I think it's too early to say where the supports are. But if you want a number, if you want a bigger number, last December, when the assembly election results were announced and we all celebrated that, the Nifty was somewhere around 20,500 to 20,800. So I do want to believe that in a worst case scenario, that number should hold out. And also from a valuations perspective, we are not really very expensive. And post today, I think we go back to looking at India's own positives. But one thing is very clear, that the easy money making phase is out of the way. I think returns is going to be far more hard work. You have to stick to top quality. We've had enough chatter around SME stocks and grade C and grade D stocks. I think all of that is out of the window. But if by the end of the day, you know, the current government crosses 272, I would say the market will take it positively, and this would just be an aberration. But anything else would just change the entire dynamics for equity markets in India.
235 right now on the screen for the BJP, but as a collective, the NDA is still holding on to leads in 290 seats. We have to bear that in mind. Gautam, just a quick follow-up, specifically on the Bank Nifty. We were looking at levels of 50,000 plus yesterday. We're cracking quite significantly today. Would you hazard a guess as to where the support is formed right now?
You know, I'm a technician, but I'm not a person who really puts out numbers on a daily basis. I think this is a market where you let things stabilize. You know, when India VIX is at a level of 30, you don't be adventurous, because India VIX typically in the past post-elections have corrected 30-40%. I think after a very long time, you are seeing an India VIX rally 30%, you know, as the verdict is out. So that's not comforting at all. Anything that is high beta and anything that has run up substantially over the last 6 months is correcting. Look at capital goods, look at real estate, look at PSU, look at auto, and obviously the banks. But I would still say that the banks are slightly better placed. And if I want to bet something for the next 2 to 3 years, I would still go out there and buy an HDFC or an ICICI or an SBI, because I think these are companies which are far beyond politics in some sense. So some of these top quality names in the business, HULs of the world, ITC, Reliance Industries, I would go there and recommend also your viewers to commit into them and just stick to top quality.
So back to the basics. Gautam, what about, the frenzy that we've seen in companies owned by the government and driven by government policy? So I'm trying to understand, is this the end of the road for the kind of run-up or excitement we've seen about HAL and some of the railway stocks, some of the defense stocks, your Cochin shipyard, your SBI? Because there were fundamental reasons for why the street also acknowledged that their balance sheets had cleaned up, they were getting orders, doing well. Some of the results have been very, very good. Just on the charts, would you stay away from this entire pack?
Well, I could be wrong, but I do feel that it's done for now. I think it was very, very overdone over the last 6 months. Please understand, the entire PSU space did nothing for a decade. You know, all of these stocks were trading at P's of 5 and 6 and 7. The re-rating happened 18 months back. In that re-rating, many of these stocks moved up anywhere between 2x to 15x. So I think the re-rating happened to some extent. Everybody in India, everybody on the street started discounting that this is going to continue for the next decade. But please understand, politics in India plays a very important role to what markets do. And we have seen that in the last 20 years. So that's probably the reason I'm staying away from high beta. I'm staying away from all of these stocks, which have delivered great returns. Not to say that they will not come back. All I'm trying to say is that at least for the next 3 to 6 months, they are going to go into hibernation, and you still can pick up certain quality stocks on correction, but not at these levels.
That froth that has been spoken about for some time is very clearly heading for the exit. Swaroop, in the run-up to the elections, there were several conversations about whether or not retail investors were piling too much into the broader end of the market, and that was visible in the kind of flows that we saw. However, at the same time, that SIP number, and I think Gautam also alluded to that fact, domestic flows have been very strong, and that's been led by the mutual fund investor. What if that now not fizzles out, but if it loses a bit of the steam that it has generated, and you see significant redemption pressure in the broader end of the spectrum, small cap and mid cap actively managed funds, how does the industry react and move?
See, Alex, this is not the first time we are seeing a change in the mood of Indian voters, and it will not be the last time too. Yes, it will be a lot of work for us, the market communicators, to go out and talk about the basic story of India being intact. I don't see any reversal in that mood of investors to not participate in the capital markets. Maybe in the short run, we could see 1 or 2 months this way or that way. But like Gautam is saying, once this settles down and one gets to see a visibility of the journey ahead, which will be seen in a very short period of time, I think people will settle down and continue to participate. Now, if somebody does not participate, it's that person's fault to kind of get out of this brilliant story called India. And once this froth settles on this news and not on the froth that you were referring to, a lot of sanity will prevail. Yes, today, like Gautam was saying, today is probably not the great day to be a hero in the market and take some calls. People who did it yesterday would have already been regretting it today. But again, it's very wrong to start off conclude on a day or two or things like that. You also know that between a verdict and government formation in the last 5-10 years have been a lot of difference. So let's see how that space pans out, and let's see how this all falls into place. But what is on display today is something which we have been highlighting for some time now. One is the liquidity of Indian markets, which really got tested today and didn't come out very highly on that scorecard. And the second part is some part of the market was froth, which came out on display. So the portfolios which will look now will, and I think will look far more broad-based, which is good for the future of investing. I think when some pockets of the market become overvalued, it gives a great valuation to the rest of the markets. And that is something which people have to look forward, and that is where
Swaroop, I was listening to you earlier, Tamanna here, and you talked, hi. So you talked about how India will always have, and you guys will always look for the good stories, 60, 100 good stories, and there will be several. Can you name just 3 today that everyone wants to know? I
think when you look at today morning, I did a tweet on this itself, and in the morning I said, don't write out consumption, because nobody favored consumption yesterday in the markets. And then today morning I said, don't discount consumption. That's the story to look out for. I think Gautam is talking about private banks. Some of the names he mentioned are solid names, and there are no reason why those names were available at those prices day before yesterday. And if you start looking at the broad base and cut out some of the overgrowing sector which got corrected today, I mean, there was no reason why some of the PSUs were valued where they were, and we were always taking the flak on 2 accounts on our portfolios, because we were not overweight PSUs, we were not overweight dividends, and we did not have small caps. So some of those discipline which we showed in the last 2-3 years probably will play out. We hope they play out, but sanity will prevail. If you ask us for our portfolio choices, I think private banks were there before yesterday as some of our top choices. Consumption is a call which we had given out a month or 2 ago. We still stand firm on healthcare, and I think what will happen is something which we've been doing is, stick to leaders, and that's something which we will continue to do.
Thanks, Swaroop, for that. And I think very important points that you're making, about the long-term story. But there's also the short-term trade to look for. And unfortunately, I think a lot of people might just have ended on the wrong end of this particular trade, right? Having said that, Kush, what can you tell us about the short-term trades that you're suggesting, even at this moment? Is there anything that you are seeing?
Well, to be very honest, it's a good idea to avoid any kind of a big trade. But even if it has to be, then perhaps you want to look at the FMCG names which are now starting to show these green shoots. Everyone's been talking about them. I think a Colgate Palmolive, and this is one stock that we've been discussing about for a while now. So Colgate Palmolive, is something that you would want to keep on your radar. Apart from that, there is also the Godrej Consumer stock. So Godrej Consumer Products, Colgate Palmolive, some of these names are perhaps something that you'd want to keep on the radar from, let's say, even a near to a medium-term perspective.
Gautam, anything to add? Where do you duck for cover?
I want to wait for day end, to be honest, because let's be honest and let's be realistic. This market has been enjoying a huge Modi premium. And different people have different assumptions whether that premium was 10%, 15, 20 or 25, and we're already off 8%. Right. So I think keeping that in mind, the numbers at the end of the day are extremely critical. And I think if the current government is able to scrape through 272, I hope so as a market person, I think then we can go back to the drawing board tomorrow and start picking up quality stocks. But if that doesn't happen, then I think the entire dynamics, as I said earlier, of this equity market rally that started in March 2020 will change. So I would want to take a call day end, doing nothing short term, just looking at top quality stocks and trying to, do my homework and try and, take some commitments post the end of the day today.